Well, ladies and gentlemen, welcome. How very nice to see so many people here. We have around 280 acceptances and another 200 folk on the web who are watching remotely. So a full house, and thank you everybody for coming along. And welcome officially to our annual debate. Now back in our usual venue here at Plaisters Hall, following our brief excursion to the Mansion House last year. And this follows another year of high activity by the CISI and the Ethics and Integrity Committee. We do have a general sense now that we are making some progress. The industry is making some progress under the headings of ethics and integrity, but as we will no doubt hear tonight, there is still much for us to do. Now, as you should know, the debate, whose flagship event of the year, is part of the CISI's mission to raise standards of integrity within financial services. And of course, integrity is a key component part of professionalism. By being members of the CISI, we've all committed to upholding professional standards, and so it's really important that the CISI helps members to act in the appropriate way and give the appropriate behavioural response at all times. Now, with that in mind, it's probably timely to remind you that we've made some subtle, very subtle amendments to the code. And normally the CISI's code would be on your chair, and I'd say put it out and have a look at it. But nowadays it's with the review, it's online, it's also on the website. But I would encourage you to reread it and refresh yourself of its contents. Now, given that we spend so much time as an industry on this subject, and it remains of crucial importance, why then is it that nearly all of the research that we read is indicating that trust in financial institutions by investors and clients remains at a low level? I believe that as an industry, we have a common commercial challenge. Doesn't matter if you're a bank, asset manager, private client manager, and that is commercially to sustain earnings in a low growth, low yield environment. And many will argue that for the banks especially, this has led to poor service as corners are cut and customer engagement has been commoditized as financial services companies strive to be scalable. And this has given rise to the widely held view that the only stakeholder that really matters is shareholders, and shortly behind them, regulators, not the customers. So to restore trust, banks in particular have hired a lot of compliance managers, a lot of risk managers, but trust requires better, more than better, and prudent management. In my view, organizations have to gain trust by showing customers three things. Firstly, that they are competent. So in other words, that they have got ability. Secondly, that they're honest, which means that they act with integrity. And thirdly, the difficult one, that they are benevolent, which means that they genuinely care about their customers. And I do think that last one is the most important when it comes to trusting an organization. I think we should reflect on that as we listen to the comments of our panel, who I'm now going to introduce and hopefully embarrass a little bit. So, first up, and for the established banks, Frank Moxon, who is the current master of the Worshipful Company of International Bankers, the WCIB. He's a corporate financier, and he specializes in natural resources. Frank advises commodity businesses all over the world. He's CEO of his own firm, Hoyt Moxon, and in another life, Frank used to work for me. At least, I think he did. It might well have been the other way around. I was never quite sure. But Frank is an active fundraiser. He undertakes a lot of charitable work, most famously Swimming with Sharks, where we all have money on the sharks. And has a passionate interest in champagne and in scripophily. Anybody? Right, scripophily. It's the study and collection of stock and bonds certificates. Apparently it's the engraving that is the exciting piece You've got to get out more, Frank. But he asked me to make it clear that he's here because we asked him to come along. So welcome, Frank. With Frank is Lady Susan Rice. Susan is a scientist, a medical researcher, and a very distinguished banker. In 2000, she became Chief Executive of Lloyds TSB Scotland, and I think if my research is right and recall is correct, that means she is the first female Chief Executive of a UK clearing bank. I think that's correct. And of course, she went on to be chairman of that bank as well. Susan retired in 2014, having been a member of the executive team of Lloyds Bank that oversaw the integration of HBOS into that organisation. She was a member of the Court of Bank of England until 2014, and she chairs the Chartered Banker Professional Standards Board. And on top of her remarkable banking credentials, Susan is chair of Scottish Water and a non-exec director of Sainsbury's. She supports the arts and has been chair of the Edinburgh Festivals Forum, many honorary degrees, and is regent of the Royal College of Surgeons of Edinburgh. Now, for the challengers, and on the other side, first of all, we have Lord Howard Flight. Howard's an investment advisor, and of course, he was managing director of Guinness Flight, which I think included a private client business, which Howard had responsibility for. I think so. He's found time to be a member of Parliament for almost 10 years. He was a member of the Shadow Cabinet, served as Shadow Chief Secretary to the Treasury. He has been in the past chairman of Investec Asset Management, and he remains a director of it, and that might be where Guinness Flight business went. And he's on the board of numerous investment trusts and VCTs. Howard was appointed to the House of Lords in 2011, and he's a commissioner of the Guernsey Financial Services Commission, and I have to say, a very good friend of the CISI. But most relevant for this evening, Howard is a non-exec director of Metro Bank, and he's been there since 2005. So he's been heavily engaged and involved in the growth and development of that bank. He's a very active commentator on markets, regulation, and Europe, and is very positive about the UK's opportunities in a post-Brexit era. And with Howard is Mark Sismey-Durrant. Mark has a long history in banking at senior level. He's a fellow of the Chartered Institute of Bankers and started his career at the Midland Bank. And it occurred to me, I might have to point out to some of the audience, that's actually the HSBC nowadays. 1999, that was. And later he became Chief Executive of Sunbank, which is a specialist lender in the retail and SME market, before Mark oversaw the disposal of it to the Portman Building Society. He went on to run the Heritable Bank in 2002 for 10 years, and then became Chief Executive of Hampshire Trust Bank in 2012. He's a board member of the BBA, British Bankers Association, and a court member of the WCIB. I know that one of Mark's hobbies is hill walking. He thinks nothing of the Three Peaks Challenge, and in his spare time, he builds sheds. So that's Mark Sismey-Durrant. Right, the programme tonight is that the running order, and each of the speakers gets 8 minutes, that's all, and I'm very strict on the timing, is that Frank Moxon will go first for the established banks, followed by Mark, challengers, Susan Rice, established, and Howard for the challengers. We will then have a Q&A session, and we will ask one person from each side to sum up for only 2 or 3 minutes. But before we get started, we will do what we usually do, which is ask the Chief Executive of the CISI, Simon Culhane, to take the temperature of the room, to see if the debaters have an impact on how you think about this topic and how persuasive their arguments are by the end of the event. So that's it from me. I hope you do enjoy the evening, and I hand it over to Simon Culhane. Thank you very much.
Okay, we're going to take the temperature, and what we normally do here is we give you a question and with four options, and then we weight the answer. And that gives us a sort of benchmark of which we will compare later on. But we always have a test question. And I thought that today's test question, given that tomorrow is the inauguration of a new president in the United States, a little warm-up test question for us might be, President Trump will be good for the US. So if you strongly agree, you're going to press A, tend to agree B, tend to disagree C, and strongly disagree D. And we've got a few seconds of music for you, so get pressing. Okay, so here's what we've got so far. 15% and 25. So 15, 25, 34, 26. So we're going to put that into our little machine, and that's going to give us a weighting that's probably going to suggest that on balance we are negative. Now, that's a similar format, but as a second question, which we're going to ask, is the second question for us tonight, which we'll compare, is, well, President Trump, will he be good for the UK? So 15 seconds. Vote now. Well, I think actually already you can see a slight shift. So that's 22, 42, 20 and 15. So surprisingly, we Brits might be more positive about President Trump than the Americans might be. So let us do for real. Let's go for real now and look at our motion. And our motion is who can restore trust in banking? So A is you strongly support the challenger banks. B, you somewhat support challenger banks. C, you somewhat support established banks. And D, you strongly support established banks. So 15 seconds, press the buttons. Right, well, I think the sense of that suggests to me that the challenger banks have the beginning of the momentum. So we've got a slight shift into the support. The sentiment of the room is generally slightly positive towards challenger banks. What it will be at the end, we will find out in an hour's time.
Okay, right. Frank Moxon.
Good evening, everybody. Let me start by saying I'm not really surprised by that as a starting result, but I would have to ask you to think during the context of this debate, what exactly is a challenger bank? The large challenger banks, like Clydesdale and Virgin, may have something like 26 billion pounds of deposits each and 3 to 5 million customers. The sort of medium-sized ones, like Aldermore and Metro Bank, have deposits of around 5 billion and maybe 300 to 700,000 customers. And beneath them is a whole panoply of banks that aren't really banks, start-up ideas, apps attached to credit cards, things like PayPal, which I'm not sure whether it's a bank or not, but people seem to trust it. And we have to put that in the context of the established banks, where the big five banks alone have total assets in excess of £7 trillion. So we've got a lot of diversity there, but also putting it in the context, I hope the thing's still working, I've just dropped the big box. Putting it in the context of the sector itself, they don't speak for the mainstream. Now, I think we also need to think what makes banks tick. And to me, there are three things: the people and the systems, and they both feed into the culture. Let's start with the people. I remember when I was first starting out in life going to the job centre, and even to get a job as a gardener, I had to have experience, and we've all been there. If you don't have experience, you don't get the job. If you don't get the job, you can't get experience. So it should be no surprise that with one or two honourable exceptions, including one start-up digital bank that has no bankers and publicly states on its website that it hates bankers, most of the challenger banks comprise people who have previously worked at established banks, both the good ones and the bad ones. So we have to ask ourselves, are these old docs trying to learn new tricks, or are they genuinely people who have a burning ambition and the experience to make a positive change? And to the extent that you believe that there are old-style bankers who can make a positive change, then I think we have to accept that they are just as likely to exist in an established bank as they are in a challenger bank. When we get to systems, I'm not going to debate in any detail the difference between challenger bank systems and established bank systems. But whenever I speak to people about challenger banks, they always major on aspects of IT as part of the difference and the conduit to doing things better, cheaper, faster. I met the other day the head of artificial intelligence at a bank, and I asked him how artificial intelligence does ethics. And I have to say, it took him about 5 seconds to come up with any answer at all. From my perspective, computers do what they are told, which explains why we still all get inappropriate letters from computer that have been generated by computer. It takes a human being to weigh up in a rational way difficult or complex ethical questions, and I don't think computers or clever systems can do that. So we move on to the culture, and I don't need to go through the various arguments about large banks and the difficulties that they might have changing their cultures, whether that be expensive branch networks, property portfolios, legacy systems, ingrained cultures. People tend to assume that the new banks therefore have an advantage. Sometimes they think small is better. But small banks need to win new customers, and they need to do that in an environment where customers are very reluctant to change. And they also have startup risk if their concepts or ideas. Those that are more established, according to one survey of challenger banks last year, are outperforming the larger banks, but this mainly reflects higher net interest margins. And to maintain those margins and their competitive edge in a very highly competitive market, they have to move higher up the risk curve. If I put that in a less technical concept, I've worked at startups in a number of industries, including stockbroking. And the challenge always is, do we do the right thing all the time, or do we sometimes have to cut corners in order to make a profit this year, or in order even to survive? So being small sometimes doesn't necessarily mean that you can afford to take the high ethical tone. I think we next have to remember how we got here. Just to name one or two scandals, there was the London Whale, which was something to do with credit derivatives, the LIBOR scandal, an unfortunate intern who did 3 all-nighters and didn't survive it, a synthetic equities trader who ran amok, illegal transactions in Sudan, Libya, and various other places, anti-money laundering checks, PPI. With the exception of PPI and possibly AML, this is not challenger bank territory. It's stuff that the big complicated banks have got into a pickle over. Just park that for a moment. Does new work? Well, a few years ago, everybody got excited about diesel cars. Now, apparently, they're a death sentence. And there was a horribly fascinating mobile phone that was quite trendy until it started blowing up. So we have to look at the new banks in a reality and note that they're not immune to the same sorts of problems that the large banks have. If we look at Northern Rock or Co-op, for instance, some of them were involved in the PPI mis-selling scandal. And one of the newer banks has already pulled out of the race when its funder asked for its license to be withdrawn. So challengers can make the situation worse when they get things wrong. But I would argue that they cannot really make it better. And the reason for that is that I think the things that we need in order to regain public confidence are less, or even better, no scandals. And whatever we do that's good, it needs critical mass to back it up. The challengers are unlikely to have that critical mass until such time as they become the industry. And I'm not a footballer, but I suspect the analogy is rather like moving from the English Football League 2 to the Premier League, except it might be quicker. The established banks can deliver. In 2015, which is the last year I could find statistics for, 1 million people changed their current account in the UK, and the big winner was not a challenger bank, it was Santander. So I would argue that the big banks have the critical mass needed to address the problem. They own the public, if not the business space, in terms of their size and the number of accounts they have and the number of people they bank for and influence. They know what they have to do, and they have the motive and the opportunity to do it. Thank you very much.
Thank you very much, Frank. Mark, lecturn's yours. Thank you.
Good evening. please forgive me a digression before I get started, but I think it's relevant for this evening's topic. A prominent city banker fell in love with an actress and for several weeks took her out and about to nightclubs and restaurants. Deciding to ask her to marry him, he prudently engaged a private detective firm to check out her background, as any hint of a scandal might jeopardize his position in the city. Their report came back stating that Miss Delamere is indeed of good character and beyond reproach, with no evidence of promiscuity, drugs, or criminal activities. Her friends are similarly of good standing. The only thing we've been able to discover is that in recent weeks she's been seen in the company of a city banker of doubtful reputation. Reputation and behaviour are core themes of this evening's debate. My banking career started in 1978 in Chancery Lane branch of Midland Bank. Banking was traditional, staff joined for life, business was branch-based, and bank managers were respected members of the community. Trust and confidence in banks was embodied in the reassuring sturdiness in their branches and offices. But it's not always been perceived like that. Thomas Jefferson stated his belief that banking institutions are more dangerous to our liberties than standing armies. And Henry Ford commented, "It is well enough that people of the nation don't understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." While these statements held true in Jefferson and Ford's time, modern media has ensured that today's banking public understands very well the issues of relevance to the business models and conduct of our banking system. Lord McFall commented that the recent crisis had exposed persistent misconduct and an aggressive sales-led culture in banks. And Richard Sermon, chair of the City Values Forum, said trust and confidence are hard won and easily and quickly lost. Trust arrives on foot and departs by Ferrari. Indeed, Lady Susan Rice herself said in 2012, the future of banking lies in recapturing trust, integrity, and probity. Today, bankers have still remained deeply unpopular. Trust in the banking system has fallen significantly and is yet to recover. This is an issue for us all in the industry. We've all heard the jokes. Sharks don't attack bankers out of professional courtesy. And what's the problem with banker jokes? Bankers don't think they're funny. Normal people don't think they're jokes. This debate focuses on whether the challenger banks or the incumbent banks are better placed to restore trust in banking. Ultimately, the industry as a whole survives or fails by perceptions and realities of its reputation. It's my contention that challenger banks, which are competing so hard to win the hearts and minds of their customers, are best placed to restore trust because they focus on their customers' experience to ensure it is positive, consistent, and delivers the right outcomes. I believe that ultimately this will be at the heart of restoring trust for us all. There are three themes to my argument: legacy, reputation and behaviours, and specialism. Firstly, the legacy problems of the incumbent banks, particularly those which expose conduct problems, continue to surface and undermines their ability to focus on delivering a convincing and trustworthy proposition for their customers. In other words, rebuilding that trust will be judged through the eyes of their customers, who will need to be convinced that things have changed for the better, and permanently. As Martin Wheatley, as head of the FCA, put simply, it's not straightforward to govern the behaviour of individuals in large, heavily stratified banking institutions. Invariably, it takes time. Despite some concerted efforts to address the culture in the larger banks, I believe that this is still likely to take a long time to achieve. Challenger banks are smaller, more customer-focused, and more targeted in their products and services. They tend to focus on the specific needs of their customers, rather than delivering a universal service to many customer segments. Their customers reward them with high Net Promoter Scores as evidence that they're doing things right. KPMG reported in 2016 of challenger banks testing the concept that big is beautiful. Writing, one might ask whether the classic economies of scale argument holds true anymore in banking, and that the simple business models of the challengers makes them better able to compete. The dominant market scale of the incumbent largest banks certainly gives them significant scope to put up a fight, but they have to continue contending with their legacy systems and service and product problems of the past, and don't currently stand up well against the challengers. Which brings me to my second point, behaviour and reputation. At £37.3 billion, the PPI mis-selling scandal cost more than 4 times the cost of staging the London Olympics. Taken with LIBOR, FX, overdraft fees, money laundering fines, bankers' bonuses, and the continuing litany of misconduct penalties and redress, and Paul Kellner, chair of YouGov, summed up the challenge for incumbent banks as being to show by their deeds and not just their words that they belong to the same world as the rest of us. Whilst the incumbent banks are trying to change their cultures, challenger banks do not have the same sullied reputation, having typically newly established cultures with behaviours more closely aligned with the customers they serve. The paradox is that the incumbents have to behave differently than in the past and convince a doubting public that their motives and conduct has changed for the better. Challenger banks, by contrast, have largely to continue delivering their current behaviours and conduct, and they must avoid the pitfalls of misconduct and impropriety. Over time, probably both will pull it off, but it's likely to be quicker for the challengers who start so much further ahead on reputation. My third point relates to the specialist focus of the challengers, delivering specifically what their customers need, rather than the more generalised and globalised offerings of the incumbents or their synthetic financial products. Whilst the range of services available from the incumbents is potentially significant, so too are the potential pitfalls in delivering such services reliably, ethically, and without conduct mishap, all of which have proved difficult even in recent times. Huge fines for banks internationally has taken on a political dimension, and systems infrastructures have struggled for some from previous years of underinvestment. Many challenger banks have less complex business models and less extensive and newer systems. Tom Blomfield, CEO of new digital challenger Monzo, cited a broken retail banking system where lenders look to snap up customers at a young age before cross-selling their own products for the next 20 years, even if they're not competitive. There's no doubt in my mind that challenger banks, which are competing so hard to win the hearts and minds of their customers with their positive customer experience, are better placed to do things differently to their predecessors and better placed to restore trust than the incumbents. And finally, if a banker and a lawyer were both drowning and you could only save one of them, what would you do? Go to lunch or carry on reading your newspaper. Thank you.
Thank you very, very much, Mark. Lady Susan Rice.
Simon, I just want to start by thanking you and the CISI for taking a punt on someone wearing a cast for this debate. And I have to tell you all, it's real. I didn't put it on for the sympathy vote, but I would accept that when the time comes. But while the CISI knew about that, I wasn't quite so sure when you asked me to speak on behalf of the established banks how much you knew about my banking past, because I've worked in challenger banks as well as established ones. And as Richard said, I ran one of the first challenger banks in the UK, Lloyds TSB Scotland, and it disrupted what was sometimes a very cozy cartel of 3 other and larger Scottish banks. I know how good that feels. So I want to start by just speaking from the heart. What is there not to like about a challenger bank that regularly tops the Best Buy mortgage tables, that consistently wins awards for customer service, that's deeply embedded in its community? What is there not to like about a challenger bank offering the best deposit and savings rates in the market, and not just to new customers, but to all customers? Ladies and gentlemen, I give you Northern Rock and Ice Save. Two examples to refute the belief that challenger banks are somehow inherently more ethical or more trustworthy than established banks. And I say that for a couple of reasons. First, because if we talk about an institution or even a business model as being ethical, it's too easy to forget that it's actually the people within the organization who act ethically. The model doesn't do it on its own. And I've yet to see any evidence to suggest that people who work for challenger banks are more ethical than those working in the incumbents. Second reason, the differences between challenger and established banks are not so great as we might assume, and there's a risk sometimes in believing our own hype. Having said that, research certainly suggests that challenger banks are viewed by their customers as more ethical and more trusted than established banks, and they're seen as being different. Challenger banks are often newer, sometimes smaller, possibly more innovative than their established peers. So they are different in those ways, but they may also be different in another way. They may carry greater risk, which could ultimately lead to a failure of trust. Think of the capital pressures. If you're new and small and suddenly growing quickly, your story has worked, your customers are coming. Where do you turn for more capital when you need it? Many of our challenger banks are shareholder-driven, after all, in much the same way as established banks are. And whether it's private equity or not, investor motives are about shareholder returns. That's their job. Whether they take a longer or shorter-term view of those returns is really what matters. But longer-term investors may be more likely to hold established banks. In fact, with challengers, there may be a risk that some investors are mainly driven by the near-term prospect of an IPO, which rewards the founders, of course, and not necessarily driven to change banking. But there are other kinds of challengers, too, those with a different type of ownership, building societies, credit unions. There's an argument that when so many societies became banks in the last decade or so, something valuable was lost. And of those remaining, there's no doubt that they comprise some of the most trusted brands in the UK. Nationwide comes first to my mind, possibly because I spent some time there this afternoon catching up with their chief executive. He's somebody I have great respect for, and they have a great story to tell. However, many building societies have disappeared from the scene over the last decade. Some ran into financial trouble, weren't well managed. In others, the management and the boards convinced members to vote for demutualization, which brought financial benefit to them all. There's nothing wrong with that, but it's not an action that attracts trust in the first instance. And then there are other challengers who are different through their business model, who choose a niche and do it really well. Handelsbanken is rightly lauded for its support for small business and its old-fashioned approach to business. Not unlike the days, perhaps, Mark, when you started out, when there was a lot of trust in bankers, when banks served mainly the middle classes and businesses. These are not universal banks, nor do they all offer basic bank accounts or retail banking for all. Their own customers might well trust them, but how widely can they really influence? And anyway, it's not the ownership or the business model that makes the difference. It's the approach and decisions taken by the people in the institution that makes the difference. Trust can't be managed, it can't be trained for, it can't be achieved simply through a new system or financial investment. It doesn't live in a model. Trust is bestowed by others from outside an institution, and it has to be earned by those within it. So let's look at who works in challenger banks. As Frank said, they're often people who've left an established bank because that's where most of the jobs are, and that's where they were trained. I have no doubt that many are motivated by the desire to do something different, but they're still the same people that they were in their old job. They haven't suddenly become more trustworthy simply by moving to a new institution. Now, even if there isn't anything inherently more trustworthy about a challenger bank, there is undeniably something newer, fresher. But newness ages over time. How often have you sat around a meeting table discussing an issue when someone has said, you know, the next generation, they have different values, and they're coming along, they see the world differently, they will fix this problem. But you know, the next generation, over time, becomes us, and thinks like us, and acts like us. So I want to leave you with three thoughts. First, challenger banks are undoubtedly delivering banking differently, but challenger and established banks are all part of one industry. We each have a unique story to tell, but if those stories only resonate because they denigrate the other category of bank, all that happens is that the whole industry is demeaned. We shouldn't be competing on who's better at attracting trust. We should be telling all our stories, more so living them, in a way that begins to restore trust overall. So if we do that, who'll have the greater influence? Well, I say established banks, because they've seen the problem and are already taking action. I have the privilege of being a director at the Banking Standards Board, which has developed an outstanding approach to assessing the internal culture, the way things are done in banks, in the institution. A number of banks, large and small, new and old, are participating, but it's the country's most established banks who are standing behind the creation of the BSB, financially and conceptually, in its early years. And I've had the honor of chairing the Chartered Banker Professional Standards Board, which has developed professional standards for individual bankers for the first time in the UK and just about anywhere else. When the Chartered Banker Institute and I approached a number of banks, large and small, challenger and established, over 5 years ago, asking them to join us in founding this initiative, only one turned us down, a challenger bank. And what it said at the time, I've never forgotten this, they said, "Can't you see in everything you hear and read about us that we're already viewed as the most ethical, the most trusted bank in the UK? We don't need to develop standards of broad knowledge and ethical behavior. We already have them." Within less than a year, they fell off a cliff because the broad banking knowledge of their seniors and their board was lacking, and the ethics right at the top of the organization was painfully wide of the mark. My conclusion, restoring trust doesn't derive from a business model or an ownership model or the date you opened your doors or the fancy fintech you might be using or the story that you tell. Restoring trust derives from the behaviors and actions of people who work in all our institutions. Established banks employ far more people. They serve more customers by a huge factor. Their reach is across all parts of society. And it's for that reason that they can, they should, and they are leading in restoring trust in banking. Thank you.
Lady Susan Rice, thank you very, very much indeed. I know Lord Flight's already made his way over to Lexington. Thank you.
Ladies and gentlemen, good evening to everybody. I'm going to just start by giving a bit of historical background, in that in the second half of the 19th century, great Brit Walter Bagehot, who created The Economist and headed the old Westminster Bank, encouraged the consolidation of banks. We used to be like America with lots and lots of little local banks, and the bad aspect of that was when the bank went bust, the whole area it represented tended to have a long period of economic depression, whereas if banks were big enough, they could spread the risk. That worked extremely well, and in the 30s, when America, still having huge numbers of little banks, lots went bust and the money supply contracted by a third, over here that didn't happen, and we fared much better than America in the 30s as a result. But the one bad thing when consolidation gets too great is that you then end up with cartels or with oligopolies. And I'm afraid that is what has happened in the UK. I don't know, 20 or 30 years ago, the decision was taken really by Sir Brian Pitman to maximise the profitability of Lloyds, that they would cut masses of service. You'd just sort of dial a telephone number and get some message, and you could never get through to speak to anybody. You never had anyone looking after you. The other members of the cartel followed, and literally, it being a cartel, no one could do anything much about it. Service was as far as possible gotten rid of. Now, my father, who'd be 110 today, he was one of the old bankers. He joined the Westminster Bank in 1926, spent his whole career there and rose to virtually to the top. He would turn in his grave if he knew what had happened to Westminster Bank, then National Westminster Bank, since his time, because I grew up as a boy still in a bank that was customer service oriented. Now, I think the banking cartel has reached a position, and I'm not saying they're all bad, but where it can really only decline. Its problems, first of all, are its systems, which are hugely expensive and very difficult to upgrade while the bank's still doing its business. Secondly is the culture. And thirdly, I think, is the simple financial point that they've got to increase their capital, and as the capital requirements for a bank increase, or reduce the size of their balance sheets. Now, I got involved with, if you like, the beginnings of Metro and giving a sort of little history of Metro, really. It was actually, I corrected it, it was in 2008. And Vernon Hill, who I think will turn out to be written up as one of the great bankers of our times, but he had built Commerce Bank in the US from scratch to become the 15th biggest bank, and was very upset because his board had decided to accept a very, very generous offer from Toronto Dominion, and he, as it were, lost his baby. And so he came over here 2 days later with the idea of rolling out the Commerce Bank model in the UK, and met up with 2 or 3 Brits that he knew, which included me. And so we really sat down and planned it. My job was largely dealing with the FSA, and at that time being not virtually still in the middle of the banking crisis, they were pretty cautious. But we got our banking license eventually. In fact, we were the, I think, first bank to get what I call a high street bank license since the middle of the 19th century. And since 2008, for me, it's been a wonderful experience in actually helping to build a business. And in just, we opened our doors in 2010, so really in just 6.5 years, we have now got over 1 million customers. I can't remember another number was quoted, but for instance, that's what it is. And the timing has proven to be, by accident, absolutely perfect. I wondered whether people, particularly after the banking crisis, would be comfortable to change to a brand new bank, whether we'd be seen as rather brash and American, but exactly the opposite. People were delighted to come to a clean new operation when they found out that our claim that our USP was a high level of service. When they discovered that was true, they were more than happy to recommend us to their friends. And even now, we spend less than $100,000 a year on advertising. We really don't advertise at all. We rely on people that have moved to us recommending us to their friends, and that has gone on growing at some 70% per annum compound, and we regularly poll our customers and all the rest of it, and there are widespread industry things done, and I'm pleased to say we come out very much as our customers saying we do deliver what we promise, open 7 days a week, everyone has someone responsible for them they can speak to, we give real service, and that is what people want, that is what people weren't getting and still aren't getting from the clearers. Now, I think the model for Metro Bank is really very easy. While our branches, you may have seen some of them, we now have 48, are rather brash, they're sort of glass and red and blue. We're very much basically an old-fashioned high street bank like I knew the Westminster Bank was when I was a boy. We collect deposits locally and endeavour to lend the money locally. We have bank managers, we have local directors, and we endeavour to get acutely involved in and help the local community where we have our banks. And if we make a mistake, we actually go out of our way to apologize to customers and to compensate them. We, as you will probably know, we have dog bowls in all the branch, and Vernon Hill is frightfully keen on dogs and gives a lot to dog charities. Now, that also is sending a message in a sense of love your dog, look after your customer. And that is a message that strangely has come through very strongly. We very much train our staff to be customer friendly, and candidly, when people join, if they find it difficult to do that, then they away they go. And so essentially, although we have staff of all religions and races and colours and God knows what, but they are all trained to be and tested of being customer friendly, and that is essential to the culture. I think the figures show that we now, some 82% of people living in London know about us, and more than 80% of our customers are happy to and pleased to recommend us to their friends. Now, also, we can't understand why the established banks have given up providing services in other particular areas. We provide safe deposit boxes, and they all are taken before the new branches are even opened. And interestingly, the rent from them now covers our total branch bill. But why on earth the other banks closed down safe deposit boxes, I cannot understand. We are also really the only bank with very well-managed controls that does margin lending, and we are also virtually the only bank that specialises and helps to provide banking services to British expatriates. We've consistently grown at 70% per annum, and that's really measuring the balance sheet, loans and deposits. We have some 8.5 billion of deposits now, again, a good bit more than was quoted earlier, and 6.5 billion of loans. And we don't pay fancy rates of interest, and I might add, we also believe we need our branches, because that is where people come and open an account. That is where, if they want to, they come and see their bank manager. And although they may do most of their banking by telephone online, that branch is, we think important. In a way, it's a form of marketing. And when people come and open an account with us, you can do it in 10 minutes, get your cards and everything, because we do the AML for you. You just have to give us your driving license. That plugs into programs that tell us more than you even know about yourself. So again, the banking cartel, you can take 2-3 weeks opening an account, all this passport nonsense, completely unnecessary. And if you're customer friendly, you can actually do it in 10 minutes.
Howard, I've got to give you a 30-second note.
Right. So I just end by saying we must have got something right. Our customers think we're great. I don't want to boast. And I think the banking cartel, I candidly think that it will have to change, and the banking scene is going to look very different in the UK in 10 years' time. Thank you.
Thank you. Thank you very, very much, Lord Flight. So there you have it. People and systems feed into culture. Challengers have established bankers in them, so they are no better. Challengers are more customer-centric, which helps them deliver better customer outcomes, which are all at the very heart of their businesses. Look at their Net Promoter Scores. Challengers, on the other hand, tend to be more short-termist due to their style of ownership, and over time, de facto, they turn into an established bank. The distinction is illusory. And finally, Metro, that's a traditional banking model. It's the largest market, I'll finish your advert for you, Howard, actually. It's the largest market cap of any bank outside of the challengers, and you can open an account in 10 minutes. Right, that was a very quick summary, which introduced many of the arguments, I'm afraid. What we do now is throw the debate over to the floor. So I'm going to get a Twitter feed. We've also got roving microphones. We've got some hands going up already. This screen will tell me if I've got anything coming in from the audience. I had an email before we even started. There's a gentleman on my side in the middle with his hand up, and then there's a lady at the front row, please. So if you'd like to address your question when you get the microphone, and then we will hand it over to the panel. Gentleman here, thank you.
Thank you, and thank you all the speakers. My name is Clyde Menzies, Fund Building. A few years ago, a Dutch anthropologist journalist interviewed 200 people working in banks. And the overriding conclusion from what he found out from talking to these people in confidence is that whilst everybody in the media, in the banking circles, people talking about regulation we need to take a long-term view, what he found was most of these people were terrified of losing their job the next day. How is it possible to create a culture of integrity when the incentives and penalties are shortening the time horizon? The second point I'd like to ask or make is, do we really understand what banks do? Because Frank, in his opening remarks, referred to deposits. In, I think it was 2014, Professor Richard Werner at Southampton University produced an academic paper effectively proving that banks do not lend money. The loans come before deposits. And I put it to the panel that until people actually understand what banking is and what it does, that it creates money from nothing, and that they do not actually lend deposits, the loans come first, then we can't begin to address the issue of integrity in banking. Thank you.
Thank you very much. Okay, well, let's take the first point about short-termism, which is what I think it was. Susan Rush, do you want to take that one first? And then maybe, Howard, if you want to pick up the point about what banks actually do.
Yes, well, I think short-termism potentially is dangerous. And so I agree in that sense. I mentioned it myself in terms of investors, and I'm very heartened to see that very recently large corporates, banks and others may not have to produce quarterly financial results. That puts a completely different kind of pressure on the business. And banks do have, can I go into the second part of the question, if that's all right? Because banks do have a purpose. You talked about how they deliver their purpose, whether they take loans before they take in deposits. But they do have a purpose, at least the high street banks, the so-called retail banks, and that is to help people keep their finances safe and to help them grow and to help the economy through lending, through business. There's some basic purposes that banks do fulfill. What I think you described was simply how they do it, and that may be up for debate.
Thank you very much. Sorry, Howard.
As well as obviously just a short-term policy for banks is unsuitable, one of the things I strongly object to, and certainly we don't do, is selling products. If you're a bank, it's about taking deposits and making loans. It's not about, shoving fund management and insurance and all manner of other products, or saying, I'm not interested in doing your banking unless you use my fund management services. And we find, particularly with our private bank, that that's what customers want. They want someone that's going to do their banking actively and helpfully. They don't want to be sold something else. Now, we could have a long academic debate. I will, to some extent, accept that the whole banking system, what comes first, deposits or loans, is another question. But I can just tell you from a single bank point of view, and I was part of it and saw it happening, Metro Bank did indeed gather deposits first. It took much longer to build the loan portfolio, and the deposits were meantime rising at the same time. And so it very much, for an individual bank, was actually gathering deposits and subsequently lending the money out.
Thank you very much indeed. I think there's another question just behind you. So, yes, that's the one. Have we made sure we got a microphone there? Thank you.
Mr. Chairman, I'd just like to address a comment and a question to the established bankers. Now, I was a banker. I ran a very large division of a clearing bank. And when I took it, I was formerly a stockbroker in one of the UK's leading stockbrokers firm. When I got there, I was absolutely appalled at the culture or lack of culture in the bank. And it was possible to turn it round. But since I left the clearing bank, I've been making an extremely good living suing the established banks because of the money that they stole from their customers in the swap scandal. Now, the culture in the people that sold the swaps, and I ran the swaps market in the bank, I would never let anybody sell anything to a customer that I didn't understand. So I thought that was a pretty good way of making sure that nobody got stiffed. I wonder whether people like Lady Susan actually have met customers, current customers of the clearing banks, to hear how disgracefully the customers are treated. They are treated like cattle, and they are treated still as people to be fleeced. The amount of money that we've been able to recover for our customers for our clients, has been staggering. Millions and millions of pounds of damages and of recovery of the money that's been stolen from them.
All right. Thank you very much. I'm going to depersonalise that from Lady Susan. It's an opinion on the sale of complex swaps products into small corporates. Now, the person I'd like to pick that up is actually somebody in the challenger banks, because Mark Sisney-Durrant is running a business that has a lot of SME clients, and they probably have benefited from that swaps issue. Is there any observation that you'd make about it as somebody's in a challenger bank, having seen how that happened? Because the complexity of that product did actually, even though the gentleman will have a different view, serve a purpose for many of those customers that entered into it. Where's your organisation on that spectrum, and what comments would you make in response to what the gentleman just said?
I think if the bank that I run is a small bank, and we focus on specific needs of SME customers. We don't sell interest rate swaps. We don't try and do things that we're not capable of doing, and that our customers don't look to do from us. And I think there's a very different model between many of the challenger banks and certainly the specialist ones like ourselves, and the universal banks that try to meet a very wide range of needs for their customers. I think the sales culture question that I think is underpinning that around the sale of interest rate swaps is one of those things where it's quite difficult to understand, without having been in an incumbent bank, what drove those behaviours. But I think certainly within our bank, we don't do heavy sales. We don't incentivise in that sort of way, because it isn't part of our culture. So we wrap our business around our customers. An SME customer could come and see us, and we couldn't meet many of their needs. We rely on the incumbent banks to do their current account and some of those other things. I think we stick to our knitting and try to deliver what we do exceptionally well for our customers, and we get a lot of repeat business on the back of it.
Thank you for that. I mean, the heart of that question really is mis-selling, which is something that comes up all the time as an accusation against the established banks. So maybe I'll just turn to either Susan or Frank. Frank wants to take that one.
Can I just make a point, which is you're assuming as part of your proposition that big banks are horrible and small banks are incredibly moral for some reason. Like you, I was a stockbroker, and like you, when I did work for a big bank in a stockbroking part of it, I found the culture rather different and sometimes rather strange. But I've also worked for a lot of small stockbroking firms, which are still financial services. And the one thing I learned there is that the culture very much depends on the people at the top. And I won't name names, but I've certainly worked in two firms where I've explained to my boss, it wasn't Richard, where I've explained to my boss the military concept of an illegal order, then defined that the one I had just received was one, and refused to do it. And I wasn't sacked on either occasion, so I must have had a point.
Thank you, Frank. Susan.
I just have a tiny point. First of all, it's very sad to hear such bitterness and strong language. But let me just say something about culture, because you use that word and it's very important. And I speak from about one of the very large established banks through this whole period of PPI redress, which all the banks have been dealing with. A lot of requests came in from potential claimants, and they had to be reviewed and they had to be judged, and decisions made about whether the claimant deserves some sort of redress. 7-8 years of this going on, over 40% of the claimants to this particular bank, and I assume this is true of other banks as well, over 40% were people who had never, ever had an account in that bank. They knew they had never, ever done business with that bank. And so there's something when I sit back at night on a Friday night with a glass of wine, and I think, my goodness, there's something about the culture of all of us. And this may have to do with some of you and some of your friends and some of your relations, but people are out there trying to get something for themselves. I just leave you with that thought.
Chairman's prerogative, I'm actually going to add to that. I do know that there are PPI claimants who've been paid out for a missold policy and have then subsequently claimed on the policy. So, doubling up on the provision. How does there anything you want to add on that subject?
I'd just say, I think rather sadly, what the gentleman said is actually true. And I think it reflects the point I was making, which is if you allow cartels to develop, you get bad habits, not in any industry. And the thing I observed, that the most extraordinary people ended up leading the established banks. I mean, they weren't sort of respected bankers. They were, dare I say it, pretty spivvy. And we ended up, and how useless regulation had been to stop this, but we ended up with the banks being mismanaged, with products being sort of forced sold to people, with customers being treated like dirt, and spivs riding high. Now, hopefully a lot of that has been cleaned out, but that's what happened.
Thank you. Lady in the front row. Sorry, I finally got round to you.
Karina Robinson, Hambro. Richard, I thought it was very good with this competent, honest and benevolent is what banks should be. And Susan, I'd like to slightly take issue with what you said about ownership. I mean, rather than challenger banks versus established banks, let me just give you two examples. My bank, my personal bank, is 400 years old, and the partners have unlimited liability. They have barely any scandals in their past, and when they have, the redress has been very, very fast. Now, that's one type of bank. But then there's another, an investment bank, Goldman Sachs. When they were a partnership, long-term greedy was their motto. And they were competent, honest, benevolent, and their clients would have agreed. As soon as they listed, short-term greedy, and it's been scandal after scandal, and they are the vampire squid.
Not quite sure what the question is. There's a very heavy statement there. Do you recognise the benevolent point that organisations have to really show they care for their customers before anybody's going to treat them? And in this commoditised world, that's a rare thing to see, especially in financial services. And I'm speaking to somebody that works for a FTSE financial service, a company. This is not just the banks. It's something that we're all striving to do. How do we deal with volume? How do we maintain that connection with the individual? How do we get that level of trust to exist? How do we help them unless we achieve it? Maybe that's behind, I'm paraphrasing, your...
Ownership.
Ownership
matters.
There we go. Frank. Sorry.
It reminds me of something I read fairly recently where the standard of a good business was somebody who was able to say, I can't answer your question or I can't provide your product, but I can recommend down the road, the man down the road who can do it. And it's a case of benevolence in terms of being able to say, I'm going to turn down some business in order to win your trust. I think that does happen. I've certainly seen it happen in the wholesale market, where people do draw a line between what they can do or what they should do and refer things in a different light. So I think it does exist, and I think it does even exist in big banks, but I dare say we haven't all come across it.
Okay, let's move on. We're actually going to get a question from head of a challenger bank. So Tracy Davison, you have the microphone.
Thank you for the introduction. Thank you, panel. I'd like to go back to the question that you've been posed today and ask, would you accept the premise that by the sheer existence of challenger banks that want to offer something that's different and invokes trust in their customers, that we will drive, that's very...
Fair enough.
Okay. We will drive the quality and the standards and the trust that the existing banks garner from their customer base?
Mark, do you want to say that?
Yep. I think one of the biggest challenges in the market is as Howard mentioned, he referred to the cartel, but the domination of the market by the larger banks. Competition is good for the market, There's no question about that. Competition brings innovation, and it brings new ideas, and it brings new ways of doing things. And I think it's really important that, given the things that I referred to in my introduction, that a younger generation can look at a different type of banking landscape. That will always include the largest banks. They have the resources to do it. But I think the competition from challengers is essential, because it provides the prod for the largest banks to consider what they're doing and change. And we see them responding. I think that the point behind my assessment of it is that the incumbent banks have got quite a lot of things still to do. The challenger banks are really quite focused on trying to deliver what customers really want.
I'm sure that's true, but there's a great cost, isn't there, to being an innovator and developing new products. And it can be the organisations with the deepest pockets that get to market first. Susan, is there anything you would like to say about that customer centricity in terms of product and proposition?
Yeah, I think customer centricity is the core of this business. And I've said that many, many times publicly and privately. There's no question about that. I think there is a place for competition. I think it's very good. But my argument has been that it isn't a binary world. It isn't challenger banks here and established banks there, and never the twain shall meet, and they will always be the way they are. Life moves on. Things change. A lot of today's challenger banks won't be here tomorrow. But some will have affected things, some will not. If you look at some of the established banks, you look right through the financial crisis and you look at the surveys that were done, and I've seen a lot of these. If you ask the question then, what do you think about banking? Everybody thought it was absolutely terrible. If the next question was, who's your bank? What do you think about that? The answers were more positive. And then the next set of questions, who do you actually talk to in your bank, in a branch, as a relationship manager? What do you think of them? And right through that period of time, the answer was, I think they're terrific. So it gets down to the people in the institution who are delivering the service. That's what it's about. Big bank, small bank, new, old, challenger, or established.
Thank you very much. There's a question, I think, right at the back. A gentleman's trying to grab my... Yes, sir.
Thank you, Chairman. My name's Peter Brown. I'm another of a dying race represented in the auditorium this evening. I'm a fellow of the Chartered Institute of Bankers, and proud of it. I started my career in one of the smaller clearing banks. There were then a dozen and more of them back in 1968, 48 and a half years ago, in the days when the bank was proud. It had just bought its first computer, but it carried on serving its customers, respecting its customers. An institution that was run by bankers, that not only ran the institution but educated its staff of bank staff how to provide customer service, how to deliver services. Move on to the present day, or more recently at least. As a fellow of that Chartered Institute of Bankers, I went to an event within the last couple of years where one of the senior officers of TSB was promoting them as an institution that was going to be doing the same sorts of things as we've heard Lord Howard speak about tonight, providing customers with what they want. Nowadays, the banking industry, the big boys, have got to the stage where they don't have bankers worthy of the name. They have people who know how to rely on what the computer tells them to do.
And what is your question, sir?
Is it satisfactory that I can go into my bank today and be refused a loan because I have no credit history and there is nobody there capable of taking a lending decision?
Okay, thank you very much. Howard, that sounds like a customer service one and a customer.
Well, I think
potentially.
banks should provide a service both on both sides of the balance sheet. So in terms of deposits, they should provide a service, and in terms of lending. There are all sorts of things. The banks got this silly thing, they weren't going to lend to anybody over 70. And various well-known people contacted me who had huge assets, but were actually seeking to borrow money so that they could reduce their death duty bills, and we found a way at Metrobank to do it. I think that what the gentleman said a moment back is absolutely right, and the way lending is done by the cartel is often crazy, that the people taking the decision aren't allowed to meet with the actual customer that's borrowing the money. Well, we do it the other way around. We won't lend a penny until the team that have to take a decision on lending have actually met the customer, understood the business. So, even the way banks lend money today has gone completely barking as far as I can see. I mean, what we need for most people, and you can still use computers and whatever fancy technology you like, but in principle is to get back to straightforward banking where deposits are taken in a fair way, where lending is done in a conscientious fashion, where customers are treated in a proper way and not like dirt, and what I'd call modern high street banking, and that's what a lot of the challengers are now doing.
Frank, the banks are disempowering their people and it's all the computer says no. What would your response be?
Again, it's an argument that cuts both ways. Some of the challenger banks don't have branches and they're entirely online. So it's going to be difficult to meet someone at those banks. I have been a customer of both a challenger bank and an established bank on telephone banking. And I didn't leave one to join the other, but I found them both actually very, very similar. They were offering the same proposition. They'd obviously given thought to what they were doing, and they'd sort of come up with the same answer. So I think you come back to the argument that says that any banker with any experience has been taught somewhere, even at a challenger bank, he may have been taught at an existing bank. They don't always come up with incredibly innovative ideas. They don't always solve the problem either. But the other thing I would say is that we've all been frustrated at established banks, because most of us are customers of them. And when I have been frustrated, I've always found somebody in the bank who does want to, even if the problem doesn't get solved at the point the problem happens, I've always found someone somewhere in the bank who does want to listen and does want to address it and does take a note and does get back to me and say they're working on it. Whether they do or not, I don't know. I've moved on, but at least they try.
Thank you, Frank. Let's hear from the chairman of a bank. There's a question from Mr. Warwick Newby over here.
Thank you, Chairman. I'm not sure whether Hambros Bank is a challenger bank or an established bank, because it was obviously established many hundred years ago, but we probably reinvented ourselves as a challenger private bank looking after high net worth individuals. The only thing we have really got as a USP is our reputation, because high net worth people do tend to talk to each other, and if you upset one, the domino effect can be absolute disastrous. So how have we tried to maintain that trust? And that is by never giving any of our bankers ever a target to sell a product. And I think it's not so much the challenger versus the established bank, but I would ask the panel whether they would agree that the move from relationship-led, the gentleman at the back who made this point, and several others of you, relationship to product-led essentially has been the problem. And until we get back to putting the customer for relationship banking in either a big bank or in a challenger bank, and it's much easier for a challenger bank, I don't think we're going to make any progress. So do the panel agree it is relationship versus transactional?
Thank you, Warwick. Susan, would you like to take that one first?
Yes, again, I don't always take a binary view of the world, but I value relationships hugely, and I think it's the right question to ask, and I think relationships with your customers do matter. But partly, customers also have a choice, and some customers want a relationship at certain times, but they want to do a lot of their transactions in a different way. And you need to not assume you're big brother and tell the customer you need this relationship, but possibly offer a range of options for the individual. But I do think relationships matter greatly. I do think relationships also exist in all different types of banks that we're talking about. Again, that's not just the purview of a challenger bank. And Lord Howard, please forgive me for saying this, but I love the concept of the dogs and having water bowls, and I have a dog and I adore her greatly. I think it's absolutely terrific. And it gives Metrobank a very unique picture. And creates a relationship with all the dog lovers out there, even if we're not customers. But what about if you're allergic? And what about if you love cats? So you can't necessarily have a relationship with everybody all the time, but certainly as a concept, absolutely.
Yeah, the Metrobank dog tweets as well, doesn't it?
I
Yeah.
just say dogs work. I'm not so sure about cats, but as you know, British people tend to like their dogs more than their relatives. I just quickly comment, which you couldn't say. In the banking crisis, huge quantities of money flowed into Hawes, and Hawes was shoveling it into the Bank of England because they were trusted as a bank when most of the clearer cartel weren't. And you think about it, Hawes even owned by its partners. But that's what actually happened. Yes, relationship banking has to be the way to go, and I think the idea of selling products which took control, all wrong, and one of the causes of all the trouble.
Thank you. Charlotte, have you got a microphone?
I have got a microphone, yes.
Charlotte,
I'm Charlotte Black. I'd just like to get back to the question about who can actually restore trust in banking. So I think it's pretty critical that it is restored, and I don't think we're quite there yet. I think challenger banks have been extraordinary, and in a way they're showing the established banks, I think we understand them in the terms of the question, a clean pair of heels in terms of the services that they're developing for customers. But actually, if we are going to really restore trust, it has to be the established banks that have to do it because they have the customers. I mean, Metro, with the best will in the world, has only got 48 branches. The established banks really need to step up to the plate, I feel, and they need to get back to giving advice to customers. I mean, they've withdrawn their advisory services, particularly the savings and all these areas, because of regulation and the difficulties that they've fallen into. And I suppose my question is, with all the reform that we've talked about in regulation recently, do the established banks think now that there is a chance for them to come back and start restoring their advisory services to customers?
Mark, do you want to take that one first, because you have a retail business as well?
Yep. I think the regulation that we've had post-crisis has been generally beneficial. It's been hard work for banks to respond to it, but it has set a framework within which all banks have to operate. And as Lady Susan said, this isn't a binary issue. The vast majority of customers in this country bank with the incumbent banks, not with the challenger banks. I would argue that the challenger banks are, if most particularly challenging the ways of thinking and the approach to the market, so that their customers get something that works for them. Because in my bank, we just don't exist if we don't deliver what our customers want. I think with an incumbent bank, I think they exist because lots of people don't know that there are challenger banks, or they haven't got the confidence to step out to try something new. So, that's the reason why I think challenger banks are so exciting at the moment, is because they, to make progress. Not all of us are very big as institutions, but I think there's a general theme through all the challenger banks, which is an absolute commitment to understanding and focusing on the customer and trying to make the experience good for them. If that translates back into the in the incumbent banks, that will be very helpful. My own bank has, if I go to my branch, which is one of the major banks, I don't get to talk to somebody who can talk about things that matter to me. I also get the sense that they want to sell things to me rather than serve my needs or understand me. And we don't sell products in that way. We focus on customer needs. And I think that's, if the market moves that way, I think we will make some good progress in restoring trust.
Thank you. Frank Moxon.
There's no doubt that there is a challenge for the incumbent banks here with a broad product range, legacy systems, and staff ways of working that have assisted for a long time and need to be changed, there's a huge challenge for them to change. But they do listen to the public. They are, as somebody said earlier, being prompted by the challengers all the time to look at things from a different point of view. There are new products that come up all the time. There's no doubt some snake oil out there which claims to be better and do things in a different way. And the banks can't be immune to all this. They know that they have to defend their current customer base, or they will die. And if you take the extreme argument that the challengers know all the good things and the evil big banks aren't going to do anything about it, I don't think that's going to happen. They have territory to defend. They know they have to do it. They're constantly criticised in the press and the media. So they have a bigger problem to deal with because they're not starting from scratch. But they are trying to do something about it, and they will do something about it.
Okay, thank you. Right, I'm going to take 2 more questions, then we're going to sum up. So, Mr. Swales, if you haven't got a microphone, and then the lady... Oh, no, we don't want that. And then
Thank
the lady
you.
who's
Nick Swales from Rathbones. I've worked as a stockbroker in a partnership. I've worked as a stockbroker in a quoted company. I've worked as a stockbroker owned by a big bank. This is a point I'd like to make, and it's about the difference in the view that the owners take on risk that makes the difference about the way that we go about our business. But my question is aimed mainly at Lady Susan. I see a parallel here in the electric industry, electricity supply industry. I understand from the introduction that you're involved with Scottish Energy. There are an established Big Six. There are 34 new challengers. Are there any lessons that we, the bankers, can teach them, or any lessons that we can learn from the electric companies?
Well, so I have to watch what I say here. I actually chair Scottish Water, which is one kind of utility, but I was 11 years on the board of SSE, which is the second biggest utility in the UK, the biggest provider of renewable energy and so forth. And so I do know something about that sector. And I can remember sitting actually at a dinner, not just with colleagues there, but with, we had invited regulators and people from government up just to talk to us about, challenges and changes a few years back. And just sitting there thinking, gosh, this could be a banking conversation. It is almost as if what had been faced up to and discussed within the banking industry was coming a little while later to the energy companies. But I will also say that, this is where we cannot lose sight of this, the big energy companies are often the ones that are doing the most in the areas of new development. So SSE, the biggest provider and innovator, huge corporate internal investor in the area of renewable energy. You may or may not like renewables, but there is, a lot of people believe, a case for developing that. They're doing that. If you come back to banks, and I mentioned this only in passing, it is the big banks that are providing services and opening their doors to people across all parts of society, not just the private clients, not just the middle classes, but to all people. And I think we can't lose sight of the importance of that. And I think it's wrong just to badmouth established banks because of the bad things that they have to address, because there are an awful lot of good things that happen. And I think that the energy companies should keep in mind that kind of aspect of their business and ensure that they continue to provide that way.
Thank you very much. And the lady, I hope, has got a microphone here. This is going to be, I think, our last question.
Okay. Thank you. Sue Milton. To restore trust in banking, I feel that the banking community has got to restore value back to society. So I'd like the opinion of the panel about how they would define that value and how would they use that value to restore trust in banking.
Who's not speaking on your panel would like to take that question? are you summing up, Frank?
We haven't decided yet.
I'm happy to. I'm happy to say that.
Yeah.
I think one of the things that's very close to my heart in our business, we need deposits to enable us to lend to our customers. And I think if you look at the market at the moment, the value for savers in this country is severely challenged in the major incumbent banks. They are unable, because they're so awash with cash, to pay decent rates of interest. So if you actually look at value for savers, you will see that it's generally the challenger banks and the smaller building societies that are providing that to customers. I think on the other side of the balance sheet, I think certainly for our business, we lend money and we price for risk within that, but we also price within a competitive market to make sure that our customers get what they need. So I think our business is simple. If we lend well, lend enough, and we control our expenses and control the quality of our lending, then our business model works.
No, I did say that was the last question, but of course we've got 200 people listening online and we haven't picked up all their questions. But here's one that's very insistent. It's been asked 8 times. Right, Frank, you're a stockbroker. There's Big Bang. Stand by. Does the panel think that Big Bang deregulation needs to be reversed to ensure more effective regulation, which in turn may help improve the culture eventually? That's a difficult one.
This rather presupposes that regulators know how to run businesses. And I remember some time ago when I was head of natural resources at a broking firm, a regulator came to see me and said, we've noticed you have an impressive list of initials, of post-nominals after your name. So we're thinking of making it compulsory for corporate financiers who do natural resources to have lots of initials after their name. I pointed out to them that some of them are honorary and I hadn't studied for them, and that in any event, having initials after your name itself doesn't necessarily make you better at anything. Flipping at it from a slightly different point of view, I would argue that the regulators are possibly already doing more than enough to tie up the banks with dealing with regulations rather than dealing with the actual problem that needs solving.
Thank you very much. Right, at this point, all we do is we ask one member from each side to take no more than 3 minutes, preferably 2, to sum up their argument, having listened to the rest of the debate. And I'm going to ask Lord Howard Flight. You can do it from there, Howard.
Can I be heard? Yes.
Yes.
I think, first of all, the real problem is what I said, which is that if you get cartels, they get into bad habits then destroy trust, and it then is quite a difficult process to clean the whole thing up and sort it out. And I think it's been made worse that large banks have become almost unmanageable, and in part because of the cost and problems of systems, and it's very difficult to put in modern, efficient systems into these banks. I think that it is pretty clear that it will be the challenger banks who will be the model of how banks ought to conduct themselves, and in due course, what I call the cartel clearing banks will copy the challenger banks. But I think in 10 years' time, the banking scene in Britain is going to look very, very different. And again, I don't want to overdo it, but if, for example, if we continue at Metro to grow at 70% per annum, 10 years' time, just think what size we then become in relation to the whole banking scene. I think next point, surprisingly, the surveys show that British people are actually more willing to move their bank accounts than Americans are. Everyone assumed it the other way around, and Brits would not want to move their bank accounts. Actually, they do move them quite substantially. So I just end up by saying I think it is impossible to think that the existing cartel can actually by itself restore trust in the banking system. This will be led by what the challenger banks are doing, and in due course the cartel banks, which will shrink for a variety of reasons, will fall in line. And that's a measure of how competition can work and should work and will work.
Perfect. So that was on behalf of the challengers. On behalf of the established banks, I think Lady Susan Rice, would you like to take a couple of minutes? Well, Frank just said it was you.
Oh, you did, okay. We were leaving this up to the last minute. Why don't you go ahead? That's all right.
Okay, I think, first of all, in reply to Howard, it seems to me that a division of a large bank is not dissimilar to an entire small firm. So provided that the management in the division are up to scratch, it doesn't need instructions from the board itself in order to make the bank work. I think the main issue here is that the banking crisis and its subsequent scandals damaged us all. I'm one of those stockbrokers that was happy at one point to call myself an investment banker, and I noticed that quite a few of my then colleagues are now stockbrokers again. And the reason for that is that even those of us who weren't rigging interest rates or bringing down governments or destroying the world in any way at all were tarred with the same brush. And I think that goes for a lot of bankers, not just stockbrokers. To me, the whole crisis is rather like people starting to attack dentists because of something that GPs have done. And I come back to my original point, that if all of us have been damaged by the actions of these large banks doing complicated things that small banks and other people don't do, then the only way that we can fix this is to really get the big banks to improve it. To the extent that, as Mark pointed out, customers judge banks, we have to assume that if they ultimately decide that there are evil banks around, they will leave them. And if there are good banks around, they will join them. And the UK evidence to date suggests that the challengers are not capturing huge swathes of the retail market. In fact, some of the challengers don't even do the retail market. So I would go back to where we were before. The only people that can fix this are the big banks because they have the critical mass to do so, and it's that critical mass that needs to do it. One or two small banks on their own does not make an industry and therefore cannot speak for the industry no matter how much good they do.
Thank you very much, Frank. Right, that's superb. That brings the argument to a close. What we're going to do now, very briefly, is ask Mr. Culhane to take the temperature of the room again post the debate.
Okay, so you've heard all the arguments. You've got your machines. You know how to play the buttons. 15 seconds, the same vote as we had before. Press away. Okay. Here we have it. 22, 27, 27 and 24. That's pretty close to a tie, isn't it? And we put it in, we find that that little swingometer, which was plus 20, is now down to minus 0.04. So we've swung towards the established banks. And in fact, overall, we think in this hall, by the narrowest of margins, that the established banks are the best ones to restore trust in banking.
Thank you very much. Right, ladies and gentlemen, just a couple of things from me. These debates work because people sitting on this panel are prepared to give up their time to do this. So I want all of us, please, to thank the panelists wholeheartedly for participating this evening. And thank you very, very much to all of you for coming along. Don't forget the 25th anniversary of the CISI. I'm getting old because I remember the 10th anniversary dinner. It's on the 22nd of February at the Guildhall. Please don't leave with the voting machines. It's an integrity debate, so leave them behind. And the bar's open, and have a safe journey home. Thank you very much, everybody.